Greetings, Dr. Jeffrey Scott here. Happy Memorial Day and thank you to those that served. This is my weekend market update for the week ending on Sunday 5/26/24. I try to get these on Saturday whenever I can. It'll be updated sometime later on the 25th. For those that are new, I don't really have anything to sell you today. I do offer some indicators, but selling is not my primary reason for doing this. I do this to help educate and to show people how to use the tools that I use. My email address, as you can see, is hgsidoc@gmail.com. If you're new to my channel, click the subscribe, hit the alarm, and you'll find out when I load these up. I do them as my weekend allows. My primary role on the weekend is granddaddy, and so I do these when my granddaughter takes her nap, if I'm lucky. So I titled this one, Is Strength in Technology and AI Enough to Keep the Bull Running? And I think that's the question right now. On Thursday, it certainly did not look that way, but boy, did we get a nice reaction on Friday with a caveat, which we'll talk about. So let's take a look at the markets. Again, if you're new, I'm going to spend 20 minutes in a slide presentation, but the slide presentation are just snapshots from the various programs that I use, and I'll talk about what I'm seeing in the market. And then I'll jump into wealth charts, and I'll make some comments about platforms when I go into wealth charts because I stimulated some emails last week. As always, this is for educational purposes only. Anything I talk about should be in the spirit of education, not investment advice. I have licenses. I have an MD. I've got board certifications in internal medicine and medical oncology, but I have none of the series that would give me the right to advise you on what to do. I'm talking, again, this is education. I don't know the size of your portfolio, your risk tolerance, nor your investment objectives. So I think it's always important to remember when you watch anybody's video to be careful and recognize what education is. It's a chance to help you, but not tell you what to do. I'm independent. I get to present at the Wealth 365. I've got some tools inside Wealth Charts, Trading Station, and Trading View, but I don't work for any of those, and I've paid in many cases for the tools that I use. And trading involves risk, and you alone are solely responsible for any investment decisions you make. Speaking of Wealth 365, it really is an honor because I'm not a professional educator. I'm a guy that likes to teach and likes to trade and been doing it for 30 years, and I like to help people. Sounds corny, but I've had a very successful career in healthcare, and in the entrepreneurial side of healthcare, I've sold multiple businesses, and that has given me the ability and the time to do things like this. And as I've already put my nest egg away, and you could actually argue my grandkids' nest egg. Wealth 365 will be July 15th through the 20th, 2024. I'm going to have a link in the remarks section. I'd really appreciate it if you click on that one. Why? Well, because they let me participate even though I don't have a mailing list. And so I do get counted up how many people register under my name. It's free, it's no obligation, and you don't even have to show up. But you could see here's the link, and again, it will be below. It's a great event. That's how I got introduced to wealth charts in the community, and I became a member. Then my indicators got added to the program. Rob Hoffman built me a scanner, and now I get to present at their Wealth 365. Great people. Also, because of that relationship, I've got a website. It's called stocksanddocs.com. You can fill out your name and your email address in that lower right-hand corner. I don't post every day. I post every day that I'm not traveling and occasionally when I'm on the road. The difference between what I'm going to do today, which is going to be 45 minutes, and what I do during the week is about 37 minutes. I try to limit it to 8 minutes during the week, plus or minus a couple. I'll give you my sense of the market, what are the leading industry groups, and what stocks I'm liking. If you like this stuff, I really urge you to consider attending, and I think now it's probably only online available, though you can reach out to Greg and Dave, our Orange County meeting. I've been going to this meeting for over a decade. It used to be done by a good friend who passed not too long ago, George Lee, and I decided with David and Greg to rekindle the meeting, sort of to pay homage to those others that aren't with us anymore. Greg, George, Ian Woodward, William O'Neill, David Elliott, Stephen Bigelow. The numbers are so big, all whose work I benefited from, and so did many of you. It's a low-cost meeting. It's $400, live or online. We have They'll be on the online session will be all on Friday and Saturday and Sunday morning. There are a number of different speakers. We run it low price because we want people to have the ability to participate. If you do it online, you miss some of the networking in the room, but you also miss on some of the cost of travel. Everybody will get access live on the Zoom. I create PDFs of all my presentations. Videos of all the presentations will be available for at least 6 months. I'll share content via Dropbox. Post-meeting Zoom, I do a couple of Ask Me Anything sessions. Typically, they want me to deep dive into how I trade options. There are packages presented. Both Sagar will have his Q tools, which require Metastock, so we'll have some discounts on his tools and Metastock. And as I'll talk about later, I do have my stuff on multiple platforms. Now, on Wealth Charts, they do have a Jumpstart package available where you purchase my tool set there, which I'll be demonstrating later in this program. And they give you a basic Wealth Charts package. You don't have to subscribe, although I think Wealth Charts is such a great program, I'd be subscribing to that over most other things. And so there'll be more discounts available than you paid to come to the meeting. Contact me as soon as possible if you're interested in the internet option, htsidoc@gmail.com. Even if you can't be there during those dates, live or online, think about supporting us because you'll still get all the content, all the opportunities, and all the potential discounts. I always start with the market. So I've ranked this with change from the beginning of the year. For change from the 5 days over here, but I can't take my eyes off of Bitcoin Trust is up 77%. Wow. And silver 27% are the two, big winners. On the week, the NASDAQ Composite and the Qs were both up 1.4. They were both up on Friday. The spiders were flat, but they were up 0.7, which means they were down until Friday. The rest, you could see down here, the Russell on the week minus 1.3, NYC minus 1.5, the Dow minus 2.3. The Russell and the NYC were up on Friday. The Dow was relatively flat. So growth looks like it's back, certainly technology led after NVIDIA earnings, but a mixed week at best. If you look at the S&P 500 sectors, and I flip-flop between the 500 and the 1500, I like the 1500 because it's much more broader, but most things report the 500. You can see the only things that were up on the week were technology and communications. And if you look at the one-day change on Friday, communications led. And you can see that here. This is the Q Edge tools, one of the tools that Sagar will be demonstrating at our meeting and will offer at a package at a very reasonable discounted price. The top part, and by the way, this is what one of my monitors looks like. Now, the tool looks a little different because each of these will be on separate page, but I have one monitor dedicated to this Q Edge tool. It tells me during the session how many sectors are up. All of them were up in the S&P 1500, 11. How many industry groups were up and what percentage of the stocks were up. Now, Thursday was almost exactly the same, except it was down to those amounts. But I think the volume on Thursday exceeded the volume on Friday. Friday was not a big volume day as you would have expected on a holiday weekend to be a light day. You could see here the leaders were, discretionary, which was been lagging. Actually had a really good day on Friday, as did communications, and some were in here, information technology as technology. But it was a broad-based rally in the S&P 500. Now down here is interesting because here's Friday. Whoops. This second group shows the combination of Thursday and Friday. All right, it's not Thursday, it's the combination of Thursday and Friday. No matter how great Friday was, it wasn't good enough to reverse the damage we saw on Thursday. It wasn't good enough to reverse the damage on the markets for the week. So yeah, the NASDAQ was up, but look at this, the broad-based S&P 1500, 10 out of 11 sectors were down on the week. 77% of industry groups, 72% of stocks. So if you're thinking, boy, it was a tough week, it was a tough week. Now, the last 2 weeks have been tough. And if you look out at the month, though, you could tell the month really started strong because the month is still pretty green. So was Friday a one-day wonder, or is it the beginning of a new rally to higher highs? Well, we're at highs already. It remains to be seen. I think it's a possibility, but I also think there's a lot of risk in this market. Let's talk about some of the risks. This is another one of Sagar's tools. This is the Q Market Breadth tool. Now, both this tool and the Q Edge and the other Q Divas, which are the different tools, are driven by Metastock data. So we'll have a deal on Metastock data at our seminar as well. I point you to the skull and crossbones. That is the Hindenburg Omen that fired on the total view. Now, the total view is a combination of the NASDAQ and the NYSE. Typically it's reported on just the NYSE. I've done some recent analysis and work on the NASDAQ, and I think the NASDAQ is relevant as well. You can see on some of these breadth things up here, specifically this one, which is the AD line. You can see how negative it was on Thursday versus Friday. Thursday was much worse. Up-down volume, much greater down volume on Thursday than up volume on Friday. And the new high, new lows are coming the new highs are coming down, the new lows are coming up. That's not a sign of strength, folks. You see these three dots here, these are three distributions. It's the NYSE, it's the Dow, and it's the Russell. We'll look at these individually in a few minutes. This here is the 13-week new high, new low, and you can see it's come off of areas that are more overbought, but it's not to the oversold. Something that Sagar pointed out on Twitter, formerly known as Twitter X, yesterday or the day before, is there were no green dots showing accumulation on this last run-up, which is sort of interesting. In a strong market, you'd expect to see periods back here, you can see them, of these green dots, these accumulation days. So that Hindenburg's got me a little nervous. If I look at the NASDAQ and the NYSE, really continues to show the same story. And here's the Hindenburg that came on the NYSE. And if we look at the major indices, you could see the distribution was on the Dow, the Russell 2000, and the S&P 1500. I'm sorry, not the 500, the 1500. So the broader based indices are the ones that had the distribution. And the Dow, look at the negative volume on the Dow on Thursday. So I think the market's a lot weaker underneath than it appears with just looking at the indices. This is another tool. So here's a second monitor that's just running in the background all day long. This is a really inexpensive worksheet from Nick Drendel. It's like 50 bucks. It uses data that's free. So it's one and done. And I like it because I could look during the day and see what the indices are doing. You could see the Dow lagged. Spider on Friday was up, as was the Q. You could see that things except for the diamonds closed in the upper part of their trading range. That's important to me. You could see that right now the diamond is below its 8-day, the 21-day, although everything is still above their 50 except for ARKK. And you could look and see for a breadth perspective, you can look at the percentage of stocks above the various moving averages by the sector. Utilities has been leading, and look at the number of stocks above the 50, 80% utilities. Great bull runs are typically not led by utilities, although maybe there's a AI story there. And the AI being that they require a lot of energy. And those utilities that are involved in transmission of energy to some of these AI users, maybe that's why it's up. The new high, new lows, this was very green in the beginning of the week, and it's flipped so that if you look at 1 month, the number of new highs versus new lows. So neutral to a little bit green on the NYSE when you look at 52 weeks, 6 months, or all time, but still red on the NASDAQ. So the new high, new lows have weakened. And if you look at Friday, you could see solar. Look at First Solar. I think we talked about it last week. Cryptocurrencies and semiconductors, and then retailers, gold miners. But if you look at 5-day change, you could see solar and semiconductors led, and the cannabis, which is a bunch of small things, was down 14.9%. But notice over 5 days, it's mostly red on these growth related industries. Get a lot of information from that cheap spreadsheet. Then I like to look at some of the other things driving the markets. On the left is a 10-year yield, the right 30-year yield. You could see a little picked up on both of these. On the 10-year was up 1% on the week, on the 10, 0.29 on the 30, so very little gains, but this was going to put some trouble and pressure on the market. Recession in our future, my answer has been no. I bet we get one. I bet we don't get one until after the election and maybe after the inauguration. Recessions are these gray bars. This is the zero line of the yield curve. This is 10 minus 2, on the right 10 minus 3. When we go above the zero line is when we get the recessions. We're nowhere close to above. If you look at credit tightness, it can occur as we go into the recession, during the recession. There's no gray bar. We're not tight on credit. And then this is probably a very important one, the Philadelphia Diffusion Index. Recessions start when this is below minus 20, and we are positive. So I don't see a recession anywhere in our near future. There would have to be some really bad economic news that comes out, and maybe that's good because it'll get the Fed to start cutting. But why does the Fed cut rates? Why does the yield curve get improved? It gets improved when the market, when the economy starts to weaken and the Fed reduces the short term to perhaps stimulate. Now you could also flatten the curve by increasing the long term, but I don't think we want to see that one either. Breadth weakened. You could see here that if we look at, oh my goodness, so sensitive. Stocks above the 200, stocks above the 400, excuse me, above the 40, they both came down, but they're still in neutral areas. They're not oversold. They're not even weak. And the 13-week new high, new low just moved up and down. It's still in above the midline. So breadth weakened a bit on the week, but it's not in trouble. This is something I thought was interesting. This is AD lines. So in blue is the index. In yellow is its AD line. And for the most part, they're lock, stop, and barrel working together. But look at the NASDAQ. The NASDAQ went higher, and the AD line turned lower. So not only do we have this larger trend of divergence, we actually had a short-term divergence come in as well. And I think that is something that you could put in the oops, I'm concerned category. Buckets tell me we're neutral. If I look at the S&P 1500, it's a 50-50 split. Well, why does it say January 2024? Because I update the list of stocks every 6 months. But this is run for the 24th, which is Friday's close, and you got pretty much half the stocks above and below the midline of their Bollinger Bands. Neutral. Hindenburg Omen. Well, I showed you the NYSE. Here's one on the NASDAQ. And if I showed you HGSI, for example, you would see that you had one on in the NYSE and the HGSI. Why do all the programs not match up perfectly? Yeah, it bothers me too. And maybe that's why not everybody wants to believe this signal. I think it's because it's what you put in the NYSE and what you take out. And I know that Lowry Research used to create a operating company only list from the NYSE because there's a lot of funds and bond funds and things that have no correlation to how you and I trade in there. The other thing that I look at with this is you could see there's still new lows and new highs on the NASDAQ, and you only had one day, Thursday, where the new lows popped up. We were probably in this edge rater, I suspect we were off maybe 5 new lows. Why we don't see that Hindenburg, and I suspect it's really got to do with how many are in my common list versus not. So the fact we saw a Hindi, the fact we see those new lows, just keeps my concerns a little higher. This is what the week looked like. If I look on the y-axis, and all these is gain versus loss, gain above the zero line, loss below it. Here we're looking at ERG, which is EPS rank plus relative strength rank plus group rank, something that Ian Woodward taught us a long time ago. ERG, high growth. And you could see that as the ERG gets bigger, performance got bigger. So this was a growth led. But notice, except for the top here, which is not a lot of stocks, most of the markets were negative. So you got your NVIDIAs and your other AI stocks that picked up at the end of the week, but the broader markets were negative. If you look at EPS rank, everything was negative, but you were less negative up here. If you look at relative strength rank, everything is negative, but you were less negative with higher relative strength. And those that had higher groups, ranks, it actually did better than those that weak. This was a growth-led move. Know your news and earnings. We have another week with a lot of Feds. Why is that important? Because I think, part of what drove this market down on Wednesday and Thursday was the Fed speak and looking at the Fed minutes that came out late Wednesday. I think there's some concern that rate hikes might be back on the board. The higher for longer doesn't seem to bother anybody. It's that concern of hikes. So you got a lot of Fed speakers. This isn't a speaker, it's a PMI. But you also got some claim, a GDP revision, which is probably not a big deal. But you got the PCE complex, which we know is something that the Fed pays attention to on Friday. So not a lightweight news week, especially with the PCEI. And if we look at earnings, you could see still a fair number of earnings. And my statement down here, which I've used for 20 years, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So market settled this week in mixed fashion. I showed you that first half of the week, and I talked about in stocks and docs, just waiting for NVIDIA. Thursday was a disappointment because NVIDIA's data was great. That came out Wednesday night, but it couldn't keep the market up Thursday. It failed late in the session. But we had a nice return on Friday, that's for sure. Growth led on the week. So we remain data and Fed commentary dependent. Strong data may raise concern of additional tightening, while weak data brings on concern of slowdown. Hopefully we get a little bit of Goldilocks action just right to allow the Feds to stay the course and keep talk of a rate hike off the table. Now, a rate cut, to me, seems less likely the closer we get to November because the Fed won't want to be accused of trying to pick the winner. So markets gave us a 1-2 punch this week with a big down day Thursday, big up day Friday. Risk is probably both ways, although with Hindi signals and signs rates in USD may have hit short-term bottoms, the sell-make crowd may have the right idea. So I remain cautious with long and short positions, high cash. Risk management's important. I'd rather be late than be wrong. So by keeping a lot of cash, I have the ability to be nimble and to move in the direction I want to move. But I'm still playing this market, and as it says, I have positions both ways. Just reminding you, the Wealth 365 event, look below in the remarks section. I don't need that one. And for my live meeting, we'd love to have more people online. Again, we do this meeting cheap. You'll get more value than you pay for, I guarantee it. And for those that will be there live, Praveen, who did my trading view indicators, will be there to help people and get them set up. So let's go on to the charts. So as I said, I do about 20 minutes. I started 4 minutes in to actually look at the deck, so I'm running on time. And then I go and I look at the charts. So let's talk about the platform I'm going to show you. I think bar none, if you're looking for an affordable, multi-broker, data included, not have to fill out all kinds of forms, don't have to pay a monthly payment, and you want something that does everything, like one of those Swiss Army knives, you want Wealth Charts. And not only does Wealth Charts come with everything I just said, it comes with Rob Hoffman, it comes with a lot of much more affiliated educators that give programs during the week as part of your membership. It comes with a great basket of indicators and scanners out of the box. And then where I'm involved with it, because I have no ownership in any of that or stake in any of that, is I actually have a package in there that I sell. So if you're new to trading, if you want one tool that can do almost everything, this is the tool to have. So the fact that I have it in TradeStation and TradingView should not be deemed a commentary about negative on anything. It's just it's reality that I have people out there, myself included, that like some of the things you can do with other platforms. But if you're looking for all-in one program to do it all, WealthCharts is your program. I also mentioned that they have this new program, which if you buy one of their educators, and I was surprised when Rob said I was one of them, you could actually get a skinny down version of the program that allows you to use my tool set and just have to pay for the tool set, no annual subscription. All right, let's look at the market. And that was not paid commentary. I don't get paid anything for saying good things about anybody's stuff. I just like to talk about the things I like and what I use. So this brown dashed line here is the close on the prior Friday. You could see we closed on this Friday right above that line. It was a super flat week, at least in the S&P 500. This is a 5-minute chart of the spiders. We opened up with a little bit of a relief rally and then came down and closed where we opened. On Tuesday, we ran up, perhaps in anticipation of a favorable Fed minutes, and you could see that sometime in the middle of the day, the Fed minutes came out, the market sold off, and then I think Powell made some comments, others made some comments, and the market seemed to recover. And then, woo, we had a big gap open Thursday, and boy, was that a head fake. What drove that was probably exuberance around NVIDIA, and then the market sold off Thursday hard, and then Friday they came back up. Now, I don't think the volume on Friday was anywhere close to Thursday. As I mentioned before, it was the beginning of a holiday weekend. So if you just woke up and looked at weekly charts, looks like a pretty flat week to me. There was some volatility, and that Thursday was not a happy session. Fortunately, as I've mentioned before, I've accidentally, NVIDIA has become my largest position, not because I have 10,000 shares, it's just because it's gotten to be $1,000 a share. And I bet among the listeners, I'm not the only one where it's become your biggest dollar value share. All right, so first thing I like to look at after that is the weekly timing model. And this is a model that I pay a lot of attention to because it keeps me in the markets and avoids a lot of whipsaw. I look at price compared to a WMA, and I look at my proprietary indicator based upon the teachings of Ian Woodward, the bongo. I actually was part of the development team, so using the word my is not inappropriate. It was a gang of 5. When we're above the WMA and green on a weekly chart, I'm in a buy signal. As you could see here, the spider has not fallen out of a buy signal since the week of November 6th. Yes, it had a pullback here, and yes, that pullback was enough to flip the bongo. But you don't get into a sell signal until both conditions are met, price below the WMA on the close and a red bongo. So the spiders, this has kept me in on a nice run. If you look at the Qs, it whipsawed you in here, but you're back in long as of last week. Similar picture on the diamonds, although the diamonds we never closed below the WMA. So I think this actually did close right at the WMA, but you may or may not have come back out and in. And the Russell definitely flip-flopped you because of the big knife down here. But for the most part, we have stayed in the markets since November, and that's been a great run. So for my trading, I look at this and it's still okay to be long. Now, I'm not blind to the rest of what's going on, and I recognize that a weekly model is a weekly model. It's going to be late to get me in and late to get me out. So I have a daily timing model. And the daily timing model, it shows me that only the diamonds have traded below the WMA. So yes, the bongos have started to flipping on the IWM and the diamonds, but until both occur, I'm still long. I bought some contra ETFs to basically backstop my long positions, and my conviction is not great right now because of sort of the overwhelming those Hindis and other thoughts. I always like to look at multiple roads, and up here I said 3 road scenario, and we got it. Now, do we continue going to all-time highs after this consolidation here? This is the spider. Do we come back and retest the WMA and bounce? Or do we break down? I think all those are legitimate possibilities, but right now I'm still holding on. As I said earlier, I've raised cash and I do have some protective positions on despite because of the counter currents. Let's go back to the indices. So let's look at the spider daily, and you could see here sort of an inside bar. We're really consolidating here after this gap up day on the 15th. If we look at some of the other major indices, so on Friday, the spiders were up 0.66. We had an inside day on the Qs on Friday, up 0.95, and both of them had bearish engulfing patterns on Thursday. And look at the volume on Friday versus Thursday. Thursday is more concerning than Friday is relieving. On the diamonds here, you could see the diamonds have fallen harder, holding above the 50, and they were down a bit on Friday. And if you look at the Russell traded down to the 50 and bounced. It was actually up 1% on Friday. So, as I said all week, my target was the 50. If we pull back, at least that's where I hope we would bounce, well above it on the spiders and the Qs, pull back close on the diamonds and bounced off it on the Russell. You can look at, where do we go? A breakdown below that's going to be concerning. As long as we stay above the 50, I think we're okay. If we look at the VIX on the week, you can see the VIX continued to drop. It was down another 0.5%. The VIX is pretty remarkably low. Now, one of the drivers, in my opinion, of what the market's going to do is going to be the dollar. And you could see here that the dollar has been in a very strong uptrend after it broke down here when? November, December. This is probably November when it started to fall. Well, it's in an uptrend now, but it squirted out. So we're in between the 50 and the lower end of the channel. A failure here and break below the 50 would be incredibly encouraging for U.S. stocks. A break back into the channel and resumed uptrend, not so much. So that's one of the things that I'm watching very closely. On the commodities, if the dollar strengthened, then gold and silver have weakened. You see, even though gold was up a little bit on Friday, silver was up a little bit on Friday, they both closed much lower than the open. And this was after a couple of bad days. Inside bar on oil up 1.2%. Natural gas, God, I love technical analysis, runs right up to 200 again and fails. How cool is that? And then one of the other things that I'm looking very closely at is the 10-year. And the 10-year on the week was up a little bit. Now, it was up a lot on Thursday, which pressured the markets. It was down a tad on Friday. It's still in its upward channel. So I'd love to see it squirt below, break below the 200, which it bounced off of, and go lower. And you can see the bongos are negative, so maybe it will. But I think the dollar and the 10-year are critical to this market. The next thing I like to look at is what are the industry groups and sectors that are leading. There's so many ways to do it. This is a bunch of, except for the lower left, ratio charts where I'm looking at the S&P 500 sectors compared to the spider in a ratio charts. The things that are leading are going to point up here. The things that are lagging are going to point down here. Technology doing well, interestingly discretionary doing bad. Real estate doing bad. Utilities have come off their highs, but they were certainly leading. You can see Bitcoin has done well. The FANGs are doing really well, and this is comparing it to the spider. So let's just look quickly. Materials came off their highs, neutral week. Communications has picked up, I'll give them a neutral. Energy has weakened. Financials has weakened considerably. Industrials has weakened considerably. Technology's gotten stronger. Staples is getting weaker. With staples weaker, utilities weakening, and real estate weakening, and XLV weak, these are all defensive plays. If somebody thought this market was about to tank, wouldn't those be going higher? And then, so I put this all together. Strength is in technology, and the rest of the market's lagging big time. Utilities is the other one that's held up, and communications looks like it's turning up. Now, other ways of looking at the market, I could go and look at heat maps, and I could look at heat maps of anything. In fact, I haven't done this before, so let's see what happens when I look at my top-down indices and see what comes up to the top. Well, that's the indices, so it's not doing anything. I like to look at the various ETFs that are looking at sectors, industry groups, indexes, countries, themes. It doesn't work well in heat map, but in heat map I can look at the quality of the market, the S&P 500 on Friday. The big caps were strong. I can look at the Russell 2000. This should look really good because it was up over 1%. And you could see it looks really good except for this healthcare stock and this financial stock. So I start with the heat maps. Heat maps tell me the market's doing okay. I like Wealth Scanner a lot. So again, this is my basket of different ETFs. I'm looking for things that are up at the top. The bigger the number, the better. The flames mean they've had a big move up, fast move. So middle of the week, I had a bunch of things at 850. So the market's come down some. Thursday really weakened the market. I go down to 600. Last weekend, I think we were at 800 and above. So semis are leading, no surprise. You could see the semiconductors, how strong they look. Clean energy, we saw before that solar was doing well. This is ICLN. See a breakout above the 200. Here's the solar TAN ETF, basically the same pattern. Here's semiconductors, a SOX, kind of at a new closing high. And then this is a surprise because IBD 50 has been a laggard, but all of a sudden IBD 50 ETF has now broken out to highs going all the way back till here, which would have been September of 2022. That probably means something with volume you could see here. And then you got the Qs, the triple Qs, and now we drop below 775. So it's solar, semiconductors, and large and small cap growth. All right, so that might be places to look at. So then we get to the scanners. Scanners are tools, in my opinion, that enable you to quickly look at markets and identify stocks with specific characteristics. I like to buy pullbacks in uptrends. Why? Because A, if I'm buying, I want them in an uptrend, and B, if they pull back, they're probably not as extended, and if they break out from a pullback and I could spot them early enough, they're early buys. That's what I live for, pullbacks in an uptrend. Now, let's just look at technology. XLK type components. This is broader than what's in the XLK. And let's rank by dots. So these are the ones that are showing pullbacks here. And I know a couple of them look okay. Booz Allen Hamilton, more of a consultant group in technology. But look at this nice breakout here. Yes, it's a red candle. It's still up 4%. Look at the volume. It was an earnings play. They beat earnings by 8%. And if you look at the news, raised to 175, it's at 158, raised to 170. So here's a stock. Is this in an uptrend? This is a weekly. This is a daily. Of course it's in an uptrend. And then we look at the daily. It's gone sideways, all right, which is a great type of a pullback because you're not giving up much, into the 17 and then had a gap up on earnings. I like Booz Allen, so it had the gap. Why does it not have 4 dots here? It says 4 dots there because I filter out if you close in the bottom half. Volume, breakout momentum, PSAR reversal, not extended, Great relative strength at OBV. So Booz Allen Hamilton, BAH, looks good. Cogent Biosciences. Seems like a funny name for a tech company, and I think this is a miss in the wrong place because there used to be a tech company. So I'm not going to spend much on it. It's not in a long-term uptrend. Okay. Eastman Kodak, not my kind of stock. Cheap stock. Skip that one. ALGM. This is one that had a big uptrend, got beaten up. They make semis that are in autos. So they make the chips. So a breakout above the 200, not that exciting. MicroStrategy. This is kind of an interesting. This is again, it's not miscategorized. We know it's a crypto play, but it's actually a technology company that takes debt to buy crypto. So even though they have a software, which I think is probably closer to the end of its lifespan, it's a crypto play because they're really a store and owner of cryptocurrency. Here's your pullback. We're in an uptrend. Only had one dot on Friday, but this one looked interesting to me as well. So to be honest, I don't see a whole lot that looks great on pullbacks. Here's a great looking chart on Western Digital. You got to put storage for all this AI stuff. Is it at a great buy point? I'd rather find it on a pullback. So do I have a semiconductor? I do. Let's see if anything shows up in semiconductors. ALGM and then Vishay. So why do I only have a couple? Semiconductors are leading because I look for pullbacks. So I have one that I call rockets, things that are leading. Microchip. There you go. I don't like the fact that it was down or closed below the open, so it's struggling up here on decreasing volume. But look at what happened here on Wednesday. Gapped up, and I wonder if there's earnings in here. It's just, nope, the earnings must be in, here's the earnings. Came in at projected. All right, so Microchip has taken off. Not perfect. Texas Instruments, a little bit of a flag forming here. Might be one to watch. Now I start to think, am I extended? And I guess with that flag, it's not extended. All right, let's look at, if they're not in rockets, then could they be Momo up? And interestingly, as good as they are, they're not showing up in the with the momentum signals. Here is LSCC, again, kind of choppy. I mean, the big daddy, NVDA, yep, but it's not going to show up on my scans because I bet all the dots are going to be in Thursday's day, and they only had one dot on Friday. But on Thursday, they would have shown up with 4 dots with a gap, but they closed below the middle or at the middle. Volume, breakout momentum, relative strength at OBV. NVDA, we talked about it every week for the last several. It was just setting up to run. So what else did I say looked good? Communications, and then let's look at this. See if anything pops up interesting in communications. So this is everything that has a dot in it. MGNI, too choppy, sideways. I'd like to see more of an uptrend. Not horrible though. If I go short term, here's your pullback and a breakout. Notice at 100 it's getting extended. This is one that showed up last week after a big gap up and it just went sideways on the week. Probably finished up on the week a little bit, but not much. Netflix, widely held. What a beautiful move. Actually doing well on their advertised audience. Little flag and a breakout on Friday. And what was the other thing that we liked? Solar. And we'll look at First Solar, whether it shows up on the list or not. Here's First Solar. This is where I got excited, but frankly, let's look at this day right here. 3 dots in a squeeze, not yet extended, getting there. Relative strength and OBV were strong. That's when I got my buy signal. Look at what happened on Tuesday. Big move up. Are there earnings in here? I thought there were earnings. They must not be in here. Let's look at the trading view and see if there's earnings, when the earnings came out. One thing that Praveen built in TradingView is just a great tool for looking at earnings. So the earnings were here. No, that was news. May. Here they are. Here were the earnings. And you could see they beat by 10% on earnings and revenue. And that was on the 1st. Let's go back here. What was the day that I highlighted here? The 3rd. So the 1st, 2nd. All right, so earnings came out in this level, and that's when First Solar changed. There are one here, Enphase, that looked interesting to me. Again, it's one of these stocks that's gone mostly sideways. But why did I say it looked interesting to me? That's a proprietary Rob Hoffman called launch indicator, a wealth signal. Here's my EMS. Look at the volume that came in. Look at the dots that came in coming out of a squeeze, not extended with good relative strength in OBV. And perhaps the way to play solar is just to look at TAN. Which is here breaking above the 200. But you could see that up until recently, solar has been hammered. Now, there was just something about tariffs on Chinese companies in this space, so perhaps this is why they're rallying. All right, so that was sort of a top-down approach. Another approach, as I said, the IBD 50 is working, is to look at stocks that are likely in the IBD 50. So it turns out that I can, and this is a teaching thing for people that have wealth charts. I have a thing here called sorry about that. I'm just going to use import basic, which is probably empty. If not, I'm going to make it empty. And while it's doing that, okay, let's empty that one. Delete. Now I'm going to pull up HGSI. In fact, I'm going to pause this for a second. Okay, in HGSI, I built a watch list, a series of watch lists, and one of them is the IBD 50, so I import it from the investors.com website. And so I'm going to take those, there's 49, that's interesting. I'm going to take these stocks, copy to symbol board text column, and I'm going to drop them in here. And we called it import basics. It's a CSV file. Now I'm going to close it. So now I'm going to go to my watch list function. I think I probably have an IBD50 FFTY. Let's see, I do. So what we're going to do is we're going to clear it. And now I'm going to import from CSV, select watch list. I'm just going to use the same one even though the date's weird. And I'm going to go find that import basic. It's going to import my 50 slides or 40 stock. And now this is the IBD 50 from this week. So I can go back into my CAT scanner. I can look for IBD 50. And this is going to go a little long. I apologize. So it's FFTY. And this are the stocks that are in the CAT scanner. And let's look at pullback and uptrends. And the three that came up, Quanta. So here is the pullback and then the breakout. Good volume, but it's extended, so I have to be careful with that. Train Technologies, major leader, probably extended, so I'm going to have to be careful. 84, not too extended. All right, so here is your pullback. Notice the daily bongo went red during the pullback. The weekly has stayed green. And then TradeWeb. Little bit of a flag and a breakout. That one looks even more actionable. So if I look at Momo Up, you'll see a lot more that have momentum. CrowdStrike is one that I believe has earnings this coming week. This has been a huge leader that's given us a recent pullback and sideways movement. This one is one I'll be watching closely. Owl is a capital company. Look at KKR. These have done really well. Sideways move. Is it getting ready to resume? Might be looking at that. And PDD is probably my favorite Chinese stock right now, but the time to have bought it was back here, and we talked about it there. Um, I mentioned KKR, and you can see KKR has had a really beautiful run, as have a lot of these asset managers. Um, and we've talked about that a few times. So I've looked at a number of different watch lists. I've applied the scanner to it. And lastly, two more. Let's look at my high relative strength list and see if anything's going to come to the top. And let's look at pullbacks and uptrends. Robinhood, I think we looked at last weekend. Nice little pullback here. Looks like it's getting ready to roll. Shockwave is a takeout. TJ Maxx. A lot of these teen apparel stocks are looking good. This one had a little bit of a pullback. You can look at GPS Gap beat up, but then you look at Abercrombie and Fitch, and you can tell which one did a better job of predicting the market. What a leader. So one that might be setting up is Ollie's. OLLI. Kind of loosey-goosey. Was it an uptrend? Yes, with a big pullback. And look what it did here in a squeeze, or to me it's a squeeze. A wealth signal in EMS. Breakout momentum, relative strength and OBV look good, but I better figure out when earnings are coming because that's over here. And then Walmart was one that I looked at last week. Here you got uptrend, sideways move. And the problem with Walmart last week was hidden on here was earnings came out this day, so you'd have to have been watching the earnings. 22% beat, and you could see what happened. And lastly, I'm just going to close up by putting up my combo list, which will be in the remarks section for those wealth chart users, combo leaders, ranked by 4 dots. And let's see if there's anything left here that I wanted to review with you before I say goodbye. We looked at Booz Allen, Burlington. This is one of my favorite charts of the week. Another one of these retailers. Earnings, I think, are out. Let's look. Let me see. Maybe they're not out yet. Maybe it was just in sympathy. Let's look at it here. BURL. And having more than one source is always good. And nope, earnings are coming. So it's looking at estimate of $1. And you could see here over the last several quarters how it's had surprises on earnings. You can see revenue May 30th when it comes out, so I might be careful entering Burlington, even though I love the pullback. Move up, and it took out the 50 with 4 dots. Here's Enphase. ESI is one that looks just like it, except the earnings were back here, and they had a little bit of a beat, 6% beat. Pullback, big uptrend, pretty significant pullback. Launch, wealth signal, EMS, volume, 3 dots, relative strength, OBV. This one looks good as well. So there are some stocks out there that look relatively interesting. Lastly, we'll go look at my buy watch list and see if there's anything here that I would point out. Just because it's on my buy watch list doesn't mean I'm going to buy them. It's just stocks that either I want to watch and see what they do, or they have some characteristics. NRG is one of those utility plays that benefits from the AI world, I believe. And it's pulled back to the 50 here, had a big day on Friday. I love the pattern. It's not overly extended. FTAI is another big leader in infrastructure play, a little bit of a pullback and a breakout on Friday. VRT, gosh, this one's just had another great run. I only buy these things on pullbacks, and many of the ones we talked about are on this list. So I've looked at a number of things, and I just want to close with something I don't usually do, and I want to go to hot stocks. This is a really cool feature that was broken for a long time in wealth charts, and I'm so appreciative of Rob. They listened, they fixed them, because I think this is a great tool. The flame says there was a big move over a short period of time. You could have gone from really low to low, from high to higher, from medium to high. So I rank them here by wealth signal or wealth score, and then these all have flames. TD Synnex Corporation, don't know what they do. This was the time to get interested. It's running away from me. Next, Enphase, this is one that we looked at. MGNI, this is one that we looked at. This is a really easy way to look at stocks if you have a short period of FTAI, Palo Alto Networks. This is one. Let's look at the earnings. We're here. Note raised to 384. Had a 5% beat. Didn't do much. Riding up to 17. If this market goes higher, I'm going to be watching Palo Alto Networks. But you can start to see companies. Here's Costco. Costco's just out of this world. I remember talking about it when it was on the 50, saying what a great place to buy Costco, and it broke out. So for those that have wealth charts, this is you set up a wealth scanner, and what you do in the filter, you pick whatever you want there. Hottest moves, you click that, only show the hottest moves, and that brings those that are really moving up to the top. All right, so what else to come? I'm going to have a video later this week where I'm going to talk about the different platforms that I have my tools in. I said it before. If you're new, if you're looking, or if you're not newer and you're looking for a comprehensive program for top-down analysis that has seasonality, options in it, futures, forex, data included, I don't think there's a better program than Wealth Charts, plus all the education and other services they provide. And you buy it at the Wealth 365 event, and you just never let go. That's how I look at it. There are lots of folks like me that have additional add-ons that you could buy, and all the work is done for you. But because I know some of you like other programs, check out the other video that'll probably get posted on Sunday or Monday where I just talk about how I implement the same approach skinnier because I don't have all the different tools that I have in Wealth Charts and the other platforms. But for me, Wealth Charts is a great platform. Have an awesome, awesome, awesome week, and come see me at stocksanddocs.com.